Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be talking about what is currently going on with the EURUSD pair and how to trade it. In 2011, the EURUSD way ahead of other currency pairs being traded in the Forex market and was almost traded 50% more in volume than the USD JPY and the GBP USD combined. Indeed, it was only a couple of years ago that you might expect the daily swing in the EURUSD pair to be well over 100 pips per day. And yet, in recent months we have seen the daily price action of the pair restricted to about 25 to 30 pips on many occasions during the European and American trading sessions when its volumes are at their peak. Let's take a look at an example which is a 15-minute time frame of the pair, where the two vertical lines indicated where the majority of the volume will have been traded. This time frame is a fairly typical choice for an institutional trader to use, so let's take a more detailed look at what's going on in example B. From the 5th to the 7th of February 2020, which contains 2 complete trading days, we can see that the total amount of pips traded is just 61, giving us our average of about 30.5 pips per day. In terms of volume, it's almost nothing. Let's drill down further in example C to define what's going on. We have broken the time period down into 3 sections. Firstly, in section A, we can see that there was sideways trading which was consolidating and restricted to only 21 pips, and where price action was fluctuating very tightly around the key 1.10 exchange level. Finally, traders threw in the towel with regard to expectations that the key 1.10 level would act as an area of support, and price action then falls lower to area B, again where it consolidates to a restrictive range of only 19 pips. Again, price action moves lower initially in area C, but again we see a fairly restrictive price action of only 33 pips, including the most volatile session in the middle of this area, which is associated with the release of the US non-farm payrolls. There was a much better than expected 225,000 jobs that were added to the labor force, and where previously one might have expected the dollar strength to move this pair 100 pips to the downside with such a number. But despite this, it was relatively unaffected. So what is happening and how can we trade this pair? First and foremost, it was only a couple of months ago that big institutional players were suggesting that this pair could be heading for the 1.15 level, such is the belief in the strength of the euro. Obviously, that has not happened, and this is largely due to a weakness in the euro and what is particularly affecting the growth in the German economy. Some say that this is a borderline recession, and where the German economy is pretty much the backbone of the European Union. We also have the fallout from Great Britain formally leaving the European Union, and where uncertainty will prevail in the European model. This is due to losing income from the UK, and whereby no formal trade agreements has yet been set in place, and where the restrictive timeline to implement this leaves many wondering whether it's achievable by the end of December 2020. The coronavirus is also keeping worries with regard to potential contraction in growth, and all of this can only mean one thing for big institutional players, which are uncertain with regard of directional bias for this pair in the short to medium term, and are pretty much standing on the sidelines waiting for clear evidence of where the euro is heading. Therefore, you should be standing on the sidelines as well. This pretty much depends on your appetite for risk. You might be better off looking at other major currencies such as the USD JPY and the GBP USD if you want volatility. But if you do want to trade the EURUSD pair, we suggest that you use simple add price action boxes such as we have drawn onto our charts and look for breakouts where they occur, or simply drop down to a lower time frame such as the 5-minute chart in order to scalp the pair to try and make a few pips here and there. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.